Hello everyone, welcome to my channel. Today I'm going to go over Google and Tesla's earnings and what the implications are for how this economy and the stock market is going to do. Are we being pulled into recession? Is artificial intelligence going to save us? Is the market broadening out into other areas that could be profitable? All this and more will be in this video. Google reported more positive results than Tesla. Its revenue was up 14% year over year, driven by its cloud business, which surpassed $10 billion in quarterly revenues and $1 billion in operating profit for the first time. Google reported ad revenue of $64.6 billion, up from $58.1 billion last year, showing that Google's advertising business continues to grow after rising inflation and interest rates tightened marketing budgets in 2022 and 23. The really unfortunate thing is that Alphabet, Google, beat on both revenue and on earnings. It beat expectations, but it just barely beat expectations, and the market was hoping for wonderful earnings. And the revenue for YouTube missed forecasts. So they barely beat on revenue, they barely beat on earnings, and they missed their forecasts on YouTube advertising. Tesla's profit margin is getting hammered by EV discounts and hefty AI spending. Tesla's adjusted operating margin shrank to its lowest in 3 years in the second quarter. The company has been trying to stem a decline in auto sales by offering big incentive and steep discounts. Profit missed Wall Street estimates, pushing the stock down by 8% in extended trading on Tuesday. So to sum it up, Google reported probably B-plus results, and Wall Street was looking for at least an A report or an A++ report is more what they were looking for. Tesla, on the other hand, came in with a C report. There wasn't anything particularly inspiring about it, and all their focus in the discussion afterwards goes towards future things like robots that aren't producing profits now, but hold out the hope that it'll be a big deal in the future. The NASDAQ futures went down about 125 points after this report on Tesla and Google. I think we have more of the same coming, where the results of the other Magnificent Seven, the other five, will be good, but not magnificent. And when you call it the Magnificent Seven, you better have magnificent earnings. And looking at the QQQ, which is the 100 largest companies on the NASDAQ, in the last 5 days, it's done nothing. It's just been flat. It's made 0% about. Its relative strength is 38, so it's definitely underbought. MAGS, which consists of only the 7 Magnificent Seven stocks, went up 0.8% in the last week. But I'm not impressed. I'm getting out of both of those, and I'm putting my attention on the small stocks, which are in the Russell 2000. I invest in the Russell 2000 because people are rotating from the large-scale stocks, especially after these earnings reports. I think there'll be more rotation into the smaller stocks because the smaller stocks have done so badly for about the last year and a half that they are beaten down and they have room to grow more than the Magnificent Seven, which are all at high levels. So I'm investing in IWM, which is the Russell 2000 ETF, and I also put some money into the triple leveraged version of the Russell 2000, which is URTY, URTY. And for the 5 days, they are more or less flat, which is actually good news for the trouble the market's been having recently. And it all depends on what happens with inflation. Now, it's expected that the small stocks will rise, because they've been beaten down so bad, and there is rotation into the small stocks. The only thing that would prevent the Russell 2000 from rising is if we go into recession. So the fear is not of inflation. If we got a little inflation, that might even be good in a way. But if we get recession, that isn't good for anything, and the small stocks will go down. And if it looks like recession, I'm getting out of the Russell 2000. What are the warning signs of recession? So the first warning sign this week will be on Thursday, the jobless claims. If the jobless claims come in over 250,000, that's going to be the beginning of my concern that we may be headed for a recession. The second concern will be the personal consumption expenditures on Friday. So we get a 1-2 punch on Thursday and Friday. It's either going to be a 1-2 punch or it's going to be a 1-2 relief. What you are looking at is a forecast by the Cleveland Fed. They call it nowcasting, and they try to predict what the CPI and the personal consumption expenditures are going to be in the future. The next one coming up is the June 2024 personal consumption expenditures, the PCE. And the good news is that the PCE, the headline number, on a month-to-month basis is predicted to be near zero. It's 0.01 inflation. Wow. And the core PCE is expected to be slightly negative, a negative 0.01. Now, this is good news on inflation and should add to the Fed thinking about cutting rates, which I expect them to do in September. But the bad news will be is if these numbers came in overwhelmingly negative. If you get a PCE and a core PCE on the June 2024 numbers that are like a negative 0.2 or a negative 0.3, that is serious, and that's a big indicator of possible coming recession. They also forecast what the year-over-year percent change on inflation will be. Next numbers coming up are the June PCE and the core PCE numbers on a yearly basis. And look at the numbers. They are in the twos, 2.4, 2.3. The Fed doesn't want to wait till it gets to 2% or less, because that means they will have waited too long. This is getting right in the area where they should begin cutting. And that September meeting is a ways off. They should definitely be cutting in September and have about 100% chance, about a 93% chance of doing so in September. So right now, there's less concern about inflation. I've noticed that oil prices have gone down somewhat. So I think we're going to have good inflation numbers. The problem will be is if they're too good, indicating that the economy is falling off a cliff. That's the way I roll. Thank you.